GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of the weekly webinar. So usual practice here, we're going to go through the major Forex markets, commodities, indices, a little bit of crypto. If there's any extra market you want us to cover, drop a comment in the video and we'll be happy to try and cover that next time. Any other particular questions on strategies, etc., obviously again, leave a comment, and if you do enjoy the video, please click that like button. So we're going to cover the euro dollar, dollar yen, pound dollar, Aussie dollar, gold, Bitcoin, WTI crude, and the S&P 500. So without further ado, let's have a look at the euro dollar. So I've left it on this daily candlestick chart here, and you can probably see why. This is a pretty picture perfect flag pattern or pennant pattern if you're trying to be a bit more specific. And you can see so this is the length of the pole, you've got the flag, and then the pole extended out the other side for your target based on a projection. And we basically banged into that 119, and you can see on a daily basis we've got this bearish engulfing candlestick. It's got a long wick at the top, and it does coincide with this projection, and it is, officially speaking, a bearish candlestick, although it only just about closes lower than the open of Thursday and doesn't engulf Thursday's low. It's not the strongest looking pattern ever, and we are in a pretty hefty uptrend, but there's a couple of factors there to suggest we might see a bit more of a pullback in the euro. Let's have a little gander at the bigger picture here and have a look at this monthly chart, which I know we mentioned last week, but we are now, if you take the 2008 high and then you take the 2014 high, we're banging right into that as a third test. And obviously there's some other interim highs here which fall underneath this trend line, but you can certainly say that we're testing the underside of a 12-year trend line, so potentially quite significant things happening here in the euro. And by the by, last week was the worst week for the US dollar. Last month was the worst month for the US dollar in over 10 years. So clearly some significant weakness happening in the US dollar, which is obviously corresponding to strength in the euro, because in case you didn't know, when we talk about the dollar index, 58% of the dollar index is represented by the euro. So part of this is dollar weakness, some of this is some euro strength after that EU recovery fund. So you can see why we're getting a bit of a pullback here. So if you think on this longer term basis, we banged into this 12-year downsloping trend line, as I mentioned, and then on the short term we've reached that flag projection and we've had a bearish candle at the top. So probably three reasons to look at some weakness in the euro here. The major reason to consider that strength can continue is that we're in a pretty strong uptrend and things are looking good for the euro. Let's switch gears to the British pound. Similar picture here. I'm on a weekly chart. This is not a monthly chart, but you can see again we're banging into a 5-year downsloping trend line in the British pound. And so despite all the talk of Brexit concerns, and they're not unfounded obviously, but if you're just looking at the price action here, it does look like, and we've been saying this for a little while now, that we've found a base at 115, between that 115 and 120 zone, potentially a long-term bottom in the pound, just specifically against the US dollar, of course, and again it's that theme of dollar weakness. And you can see the pound, if we just look at last week, had a really good run. It's had a good couple of weeks actually. Broke out that short-term declining trend line the week before last, and last week rallied up to reach, and obviously this is on a weekly basis, and these were the two huge weekly declines that we had in FX markets at the height of the panic in March, and we've erased all those declines in pounds. So yeah, happy times for the pound, but a similar situation in terms of the euro, where we have run into that big long-term trend line, and we've put in a shooting star reversal pattern at the top, which potentially turns into an evening star depending on what happens today. So if we close higher again today, this pattern becomes a little bit less reliable. If we close lower today, then that's pretty much our evening star bearish reversal pattern in place, and doesn't always work, but in combination with the downsloping trend line, again, a couple of decent reasons to suggest maybe we get a bigger pullback. And same deal with the euro that I didn't mention, is that we're well into overbought territory. I don't always mention that because you're almost necessarily overbought when you're in an uptrend, but still it's another consideration for why there might at least be a pullback, if not a trend reversal. Right, switching gears to dollar yen now. Just to show that, you know, I'm not always just showing you the things that work in terms of what I showed in previous webinars. So this is a similar thing. So obviously when we're talking about dollar yen, we're generally sort of talking about a bit of a mirror of euro dollar, but the euro has been stronger than the yen because actually we haven't really needed a haven currency, because actually stock markets closed higher last week. Generally things are quite risk on in markets, and so the yen did strengthen against the dollar, but then it quickly snapped back, and we've seen that a few times, and I did send this out in a daily article as well, that the 105 area has been pretty interesting of late. So if you look at this chart here, you can see, well, 100 is obviously massive, but every time we've dipped below 105 in the last 3 years, not long afterwards, we've snapped back up towards 114 again. And the last couple of occasions we haven't. The last couple of occasions we've not even made it up to 112, and we're back down here again. So this could be finally the one where 1.5 gives way, but the initial indications is that that it's not. And what's going on behind this? Well, you know, obviously all sorts of things, but I would say the main thing is that the Bank of Japan are defending this level. They're defending 105 because it's, you know, it's the big 5 figures ahead of 100, the kind of psychological level that will get a lot of attention in the media and in markets should the yen get stronger than that 100 level against the dollar. Keeping in mind that the Bank of Japan are obviously throwing everything at trying to keep the yen weak, and so if it crosses to that 100 barrier, you could sort of say they've failed. So what was going on? Well, I think that, you know, I'm not a party to this, but a few phone calls go out and a few comments get made, and I think the Deputy Finance Minister said something, it didn't really work, and then Aso himself, the finance minister of Japan, did say something. I don't know the exact words, but something about he's a little bit concerned about the currency or something like that. And so we got this reaction stronger in dollar yen. But it's, you know, it's basically bounced into this old support area. If we call this old support at around just a shade under 106. It basically bounced from below 105 up to 106. So it was a good move, but now you can see that today it's kind of fading that move below 106, and potentially if we fail to close above 106 today and we stay below this support from these two lows from April and June, then it would look like the downtrend is taking hold, and actually maybe this projection that I was saying has so far failed might actually eventually come and hold true. And the bottom of this projection is down here around say 102, really 103 is where it comes in, and that's again a level where maybe some rhetoric comes out again before we get, because it's 200 pips above 100. So tricky market to play, this one at the moment, particularly to the downside. The trend is down, but the central bank chatter is to the upside, if you know what I mean. Okay, switching gears to the Australian dollar against the dollar. So it's really been grinding above this 0.7 level for a while now. We did get that quite decisive breakout where we got through 71, but now it's stalling around. And it got above 72 last week as well, but it's sort of making hard work of it. and if you see on the, remind ourselves on a weekly basis, those two lows from over there, and as we'd mentioned last week, this 61.8% level. It's a confluence of resistance coming in at this basically around 72, which could cap this rise in the Aussie dollar. It's still trending up, but just a bit of resistance here to get through first. No real evidence that it's rolling over from here yet, but we've come into this previous peak. We've closed higher the past 2 weeks, but we've also closed off the highs for the past 2 weeks as well. Not much more to add to this. The trend is higher, but just be a little bit wary on the Aussie, because it tends to correlate with the pound and the euro in terms of the dollar. So if they are about to see a setback because of those long-term trend lines, the Aussie probably will too. Right, let's change. Let's move away from Forex here. Let's have a look at gold. So this is our 4-hour chart. I've zoomed in a bit just because the daily you can't really see anything. It's just fired higher day after day, and only midweek and then a little bit as of today is it actually showing some signs of a weakness. But really you need to go down to the 4-hour chart to actually see some detail, and you can see that we made this big rally up, but we've actually already had a pretty sizable pullback, but it just happened intraday, and we actually closed higher the same day. Such is the demand for gold at the moment. So I've got this 50% retracement on the graph, but if I add in the 38, let's go back to the defaults, I think it comes in about, yeah, okay, so that pullback, it's already pulled back 38% from this rally, so that might in fact be enough. And so now it's already retesting the highs. It's done its 4th test of the record high, and to me it seems like a pretty good chance that it just breaks out again. And really what there's no technical barriers above. I think the spot price is just making a run at that 2000 mark. We missed it in 2000, whatever that was, 14 was it? 2011, when gold last made its massive run higher, and I think this time there's a bit more determination for it to happen. It might not happen so quickly. Of course we could have a big pullback first, but we are we're around $10 shy, so it doesn't seem like a massive call at this point to say that gold could hit that $2,000 per ounce mark. It's already done so in those distant month futures contracts. I think it was a December contract that already hit 2,000. The front month futures has not hit it yet, and nor has the spot price. If we do fail at these highs, which has happened obviously so far, the first level of support I'd be looking at would be these just first set of lows here. Maybe we're just in a bit of a range, and so 1940 potentially the base of the range, and then obviously there's that 38% level, which was basically 1900, 1906 I think was the low. That'd be the next area to potentially look for this just to be more like a sideways range, or just that kind of that typical pullback zone between the 50 and 61.8%. For if we are going to see a bigger pullback, could go into there before this uptrend continues, but I'm not seeing any signs of a long-term reversal at this stage. Right, on to WTI. This is kind of interesting. We were in quite a well, an obvious, if you like, upsloping kind of wedge trendline pattern here, and we broke below it last week, but we're still holding on to the 40 level, and crucially we got a little rebound off the 20-day moving average. So trend is still in place, but we've just had one quite good signal that the trend is starting to reverse. If I kind of zoom out in this 4-hour bit, you can see that we did have multiple tests on this trend line. It was quite a solid one. 1, 2, 3, 4, 5, 6, as you might say. It broke on the 6th. and we're just holding around this 40 level at the moment. But I suspect that 40 could give way. We weren't quite able to get through 42, stalling a bit around 40. I think we could get another pullback here, but it does look more like I mean this quite a strange looking RSI setup here. It looks like it's just kind of fading down off of overbought levels, but there's not really any signs of like a vicious sell-off. But obviously that could still come. But at the moment it looks like it's just kind of wants to grind down a bit, maybe have a drop for a couple of days to find new buyers. It seems more like the situation to me. Of course, if we do take out that 42 level on the top side, that would be quite a decent breakout. So we broke down through the trend line, couldn't follow through, held the 20-day moving average, and then break up through 42. That would actually be pretty good. That would be a decent bullish setup. And then as we've mentioned for a while, next major resistance probably at the 50 level. It's the round number, and it's also where we put in a series of lows through 2019. Right, let's move away from commodities. Let's have a look at crypto market. So things haven't changed too much since we last spoke. We had that breakthrough the 10,000 level, and we ran up into 11,000, and we've kind of stalled out around there. But nothing too severe looking. We've barely even closed lower for a day, but we've just been going sideways a little bit. Doesn't necessarily look like a top to me. It looks like we can continue to the top side, but the patterns in crypto not always as solid. But I think if you can, if we did have the opportunity to have a pullback down towards that 10,500, which was the prior resistance, between 10,000 and 10,500, that would be a lower risk opportunity. But I do tend to think that this little range that it's making here, with maybe 10,800 or so as the base of the range, and 11,400 you could say as the top. Seems to me that's more like a consolidation before another move higher. Even though obviously we did have a big push to the top side, we'd spent so long underneath 10,000. To me, now that we're above it, the higher probability scenarios that we continue to break out to the top side. And then finally, we've got stock markets here. Now we did have one of the highest weekly closes since March on a weekly basis. But we did end Friday off the highs, and so it was almost a reversal of what happened in the dollar, where the dollar was weak and then the dollar actually strengthened. And a bit similar with stock markets, we started the day off strong and then kind of ended down near the lows. But that's by the by. We basically took out the June high, but we just haven't really been able to do much with it since. Clearly we're not far off record highs in the S&P 500. We've already done it in the Nasdaq a couple of weeks ago, not done it in the Dow yet. So that's kind of what we're trying to set ourselves up for. I would say the price action's been pretty strong relative to the quite bad news in terms of US GDP and high numbers of cases, virus cases in the United States. Although I did see a graph today showing the number of cases tailing off a bit globally as of the last week or so, and so maybe that's a good sign. Maybe the markets were just kind of consolidating, waiting for that good news, and we can actually kind of push higher when that good news comes through. So nothing bearish about this chart at the moment. But we're just kind of struggling to make any progress past the breakout. And obviously if that happens for too long, then you start to wonder, when do the buyers actually come through? Maybe they don't, and we could actually struggle and have basically what would end up being a false breakout. So watch out for it. If I just draw a kind of box in here on this 4-hour chart, if I put a rectangle in there, obviously that was the level we tried to break from. We tested a few times, broke, tested, tried to rally to the top side, failed, came underneath, but then we didn't go any lower than that either, and obviously we're just sideways. So consolidating here, so whichever side of this box we break from, that tells us where we're heading next. Okay, that's it. Thank you very much for attending, everyone. Thanks very much for watching. If you did enjoy the video, click that like button, and obviously click the subscribe so you don't miss next week's video. Thank you, everyone.